and stocks with the real John Such.
Okay.
So
See if I'm still trying to see if mine is gonna go live here or not.
I think
Okay.
mine's already live. So okay, so the topics today are about war, inflation, Bitcoin, and then how we how we think we are gonna position our portfolios for, I guess, the future, right?
Yeah. In light of, all the new wars, all the new challenges, um, they were gonna be facing, and I kind of like to use Kathy Wood's term, the new Roaring Twenties, just because I like to think that's the future we're heading in towards, but it's definitely uncertain.
Yeah, no, listen. I think stock prices are going to be so high in the next 5 years. We are not going to be able to imagine it because, just looking back, I don't think any DCFs are going to predict what prices, let's say Microsoft is in today's day 5 years ago, right? There's no such thing as I think DCF for the next 5 years. I think they're just trying to get the next 1 year. So once again, I think stock prices are going to be very very high in the next 5 years. So I don't think you should necessarily be too worried. But we should always be worried about the short term, and I think we are going to be very very volatile in the short term. So that's just what I think. Yeah.
Yeah, definitely. It's kind of interesting because I'm looking at the wars um, in Gaza and everything right now, and economically, Gaza is, I think they have like 50% unemployment rate. They don't produce a lot in the global economy, so I think the Gaza-Israeli Palestine situation right now isn't necessarily going to affect a large portion of the market. I think the only thing that it's really going to affect is the defense contractor stocks, the Palantir, the Boeing, because even after 9/11, the defense contracts were up. I think it was like 1.4% the month after 9/11 happened, and all of the like utility stocks, energy stocks, and everything went down. But that was because we were going to be going into a war that was more related to the production of energy in the Middle East. While this new conflict, I feel like isn't really going to affect those things unless like Iran and the surrounding Middle East decide to get into it, and then the U.S. of course is going to be like, well, you guys are our oil reserves essentially, so that might play a part into it. But I think for right now, until that escalation does happen, um, I don't really see it impacting, like the energy sector or anything. Maybe like our reaction as investors will affect the stocks because we're assuming that in the future that we're going to essentially have another war over oil. But at least right now, I don't see that escalating um, to that point. Other than the U.S. mainly supply, I think it's like 2 billion a year goes to Israel. We're the U.S. is going to have to start printing that money to put back into the bullets that went to Ukraine, the the planes that are going to Ukraine, and then on top of that, all the defense systems that we're going to have to send to Israel. We're going to have to pay for that. How are we going to pay for it? Either printing money, more debt. So it's like a weird situation where it seems like we're going to have to print more money to keep up with the changing like geopolitical aspect, but it's not necessarily printing more money for the safety and stability of say like the US or China or any other major superpower out there right now.
Right. Well, that's the argument that by, I guess, protecting Ukraine and Israel, we are sort of not allowing them to go to the U.S. shores. So that is the theory out there, but I don't know if I necessarily believe that. It's possible, definitely, but the thing about the monetary printing is that I guess this is a stock stream, right? Eventually, it's going to flow into the U.S. Stock market as well, and whether inflation is going to devalue you guys as currency, I think you guys shouldn't worry too much because other countries are getting diluted to shit way faster than the US. So at some point, I think what the US is doing, being in a huge amount of debt, being a huge money printer, I don't think you guys are going to suffer as much as other countries are suffering. So yeah, I think monetary policy, it shouldn't necessarily matter in the long term, but I know you guys are facing high oil prices, and that's because of your last in first out policy for oil. I'm not sure if you know about it. And then we have sorry, I blanked out there. Okay, yeah. So what do you think about it?
Well, could you? I'm not fully aware of what was the policy that you said
Oh,
the U.S.
okay.
has.
So last in first out policy is basically if the oil prices spike, like if you see the ticker on crude oil spike, you guys' gas prices spike immediately because you guys take the last in, which is the most current supply, and then you guys eventually go down to last in first out, which means when the oil prices rise, you guys in the US, I repeat that point, but you guys in the US take the most recent price, right? And then eventually it does go down. But for other countries, we take our reserves first, so our oil prices are not as volatile. So I
Yeah.
think that is something, yeah,
Okay.
some accounting thing, yeah. There you
Uh,
go.
yeah, that makes sense. Especially here, I know, like, in California, at least, when you meet up with someone, it's like one of the first two or three topics people talk about is like the gas prices. So it makes sense because, like, I don't know at any point in my life living in California that gas prices weren't like one of the main topics of conversation. So it makes sense, like, that's our policy when we're seeing it affect us, like, in our social lives.
Right.
Um,
So I think war in other countries actually cause instability in America, just mainly because of the oil prices. But uh, yeah, and it's very interesting because I live in a country where not everyone has a car, and we have literally never talked about oil prices. So it's very very interesting.
yeah, it's just like
But
not as
obviously
culturally relevant for you guys as it is for us, which
yeah.
makes sense when we went when we went to war for oil in the past. So it's it's kind of uh, a weird situation, and like on the war front and printing money to give to these other countries, it seems almost kind of like a hedge for the United States. Is like, you know we have enough resources to be able to go into debt, print this money to send over. It might be volatile for us here in the U.S. for the short term, but over 5 years, you know trying to get that stability in the rest of the world is almost kind of like a trickle down economics. Like, we give you money because eventually, we're not going to have to spend as much money in the future for you guys. But that also goes into like we need um, we need industry to be built in those countries, to where that money that we're putting in there is like actually effective. Because you can throw money at a problem all day, but if you don't have a business in those countries that can, grow and spread that, wealth, then it's just throwing money at a problem and not adding any growth to it. Um, but I just don't see like real any companies right now that are like providing that value for other companies or for other countries, except for like maybe Palantir on the software front.
I don't know of net value for other countries. I do know just setting out a business in another country is a good thing for the other country because you provide tax and you provide the
Provide
economy
jobs.
runs off, yeah, jobs, and technically a boost to the economy because you provide a way for an exchange of fees, so that way people go to work, that way people spend their money, and that's how economies run. So just setting a business up in other countries is going to help in that aspect. So let's talk about assets and Bitcoin. So do you have a presentation up on Bitcoin?
Yeah. Let me pull that up real quick. It's not very long. It's only a few
Sure.
slides. But I'll just do like
So
a quick.
I will assume your theory is that Bitcoin is the way to hedge against inflation, right?
Um, yes, but I think it is more. On top of that, I think it's also um, a a hedge where we see governments trying to control a lot more of how we interact with each other. Like on a day-to-day basis, we saw that through, the COVID lockdowns, and during that time is when I actually, I kind of knew what Bitcoin was, but when I was seeing all these lockdowns, and I was still going to college at the time, and I was getting really into um, Nietzsche, um, and like essentially being your own person. I was like, how can we be our own people with our own private currency? And I saw Bitcoin as kind of like the only outlet for that, to be like, if I wanted to pay you for this, I could instantly send you some Bitcoin, and I don't need my government or my bank or the IRS like interfering in that. I should be able to do what I want with my money and not have, you know, these external constraints put on me. So I'll just kind of go over this. Is my thesis behind Bitcoin is it's essentially the alternative for our financial system. If we're not trading in dollars or seashells or gold or iron, um, those things are heavy to move. If I wanted to ship you $1,000 worth of metal, that's going to cost way more than me, you know, like a 3 cent transaction fee on Bitcoin to send it to you, you know. Um, and then also, like, since there's only a 21 million gap or supply of Bitcoin, it's also deflationary in the sense that someone could lose 1 million of that Bitcoin, whether their kid accidentally throws out their hardware wallet, or the government catches them in some tax fraud and seizes that. So the supply of Bitcoin is only going to be going down, which is going to drive prices up. Essentially, like what would I'll get into it.
No,
Yeah,
well, the lost Bitcoin is going to set a floor for Bitcoin, right?
yeah,
Yeah. So that's so not technically speaking, just theoretically speaking, Bitcoin should hold some amount of value, even if theoretically everyone sells out of it.
yeah, because there's.
Yeah, but
Mm,
right. So my question is, Bitcoin as a currency, I still don't see that because currency has to require some sort of exchange of hands. And I know that's maybe possible in the future, but I know you guys need to build some tech. You guys need to I guess lower the fees. I'm not sure if it's possible for that
the
in
cost
order
of
for
entry.
Bitcoin, right? And also let's see here. Bitcoin is way too expensive for I think the average person to own. But if you're just transacting huge amounts of money, I think that it's possible as well to use Bitcoin. And okay, so you talk about decentralization.
Mm,
Um, I I do understand that the currency is definitely manipulated by the government, but the problem with Bitcoin is it is manipulated as well. So do you have any like answers for that question?
yeah, so I think when you get onto these large systems of anything stock market, there's going to be someone trying to manipulate it for their own
Right.
game, right? That's kind of like what we do essentially. We're trying to, even if you put $1 into a stock or to Bitcoin, you're hoping that that $1 is going to transform into a profit in the future, which is kind of, you're trying to manipulate your own small segment of that market in that transaction. Um, so I don't think we, at least in Bitcoin, you can obviously make a bad trade because someone, like we saw that one spot, there was one big candle spike on the news of a fake spot coin BTF ETF being approved. Like that could have been considered like a market or someone trying to manipulate the market right there. But I don't think like broad scale market manipulation in Bitcoin is um, for me, I don't see it as big of a risk as you might see with like in a normal stock, if that makes sense, or like China
Right.
trying to like devalue their currency, like that type of
Right.
market manipulation.
Or even the government, manipulating the currency as well. So okay, I would argue that Bitcoin right now is still an asset rather than a currency. Do you agree with that?
Right now, I
Yeah,
would
right now.
just because we don't have that infrastructure built out for
Right.
me to go down to my Starbucks or, my 7-Eleven and exchange in Bitcoin. There's still infrastructure that needs to be built up for it, but I think that's the time you want to get in. Like, would you rather, like,
Right.
I
Before
wish I
everything. Right.
invested in Enphase, you know, because I graduated high school in 2012, and during that time, like all of the jobs that they were trying to get us to go into were in wind, solar, electric, right? And I was like, that would have been the time to like get into an end phase or get into like a wind turbine manufacturing during that build up of the infrastructure phase. So I see us um, still in that same like S curve of we're starting to build the infrastructure around Bitcoin to where it can turn into that medium of exchange. That it's not, you know, like I saw this one presentation where they developed a system where if I wanted to send you $50 worth of Bitcoin, I could send you $50 USD. It would convert to Bitcoin, and in that same second, that Bitcoin would be converted into your local currency. So it can be kind of a medium of exchange in that it can convert currency quicker and at like the actual price of the conversion instead of, I think on the bank that I use right now, if I wanted to send money to another country, it takes like 3 to 4 days. And then the
Right.
conversion on my $50 to that other currency, it's got 3 days to fluctuate. But with
No,
Bitcoin,
no, no.
it's an
Right.
instant conversion, so you don't have to worry about the fluctuations in Bitcoin. It can literally just be the way in which I transfer my currency to your currency.
Oh, okay, I understand. So you're saying because if you are transferring actual fiat money, there will be conversions and then there will be inefficiencies in that conversion. But if you transfer Bitcoin, that will be, a one-to-one transfer. So that isn't necessarily a conversion fee. So yeah, I understand your point. I think let's move on to the next slide before I give sort of another argument here. So sorry if I'm trying to argue too much, but I
No,
think it's
no.
good for you as well, right?
Yeah,
So
definitely.
we talk about infrastructure. Because Bitcoin is a decentralized, I guess, sort of technology. The problem with infrastructure is that either everyone has to adopt Bitcoin or no one's going to adopt Bitcoin, right? So we're going to have to like get either Visa or Mastercard to sort of adopt Bitcoin. And I think we are seeing that sort of right now with PayPal. So I think what we need for Bitcoin is for all these fintech companies to adopt Bitcoin. So is that correct or not?
I would say Bitcoin doesn't need them to adopt it,
Mm.
but it would accelerate the pace of Bitcoin adoption in
Okay.
general. Because my whole thesis behind Bitcoin is that it's a separate way from the way that we've normally been doing anything. Anything to accelerate that process is just going to one have that more Bitcoin adoption, but also it's going to produce a lot more innovation even within the traditional banking system because you know, I'm looking at these banks and I'm wondering what is their risk right now? Their risk is anything that disrupts the status quo. So I went into Bitcoin like trying to look for how can this disrupt the way things have been going, and what's the risk reward of that disruption. And I thought the disruption way outweighs any of the negative sentiment around Bitcoin, given a 10-year time horizon. Not counting
Okay.
Wood's 5 years, but 10 years is what I look at. But even on like the day to day, I see Bitcoin, just I see it producing a lot more value in the long term and the short term compared to if I bought the S&P 500. Not that the S&P 500 isn't a
Mm.
good vehicle to grow your wealth. I just see Bitcoin as a better vehicle to grow that wealth.
Okay.
Um,
So let's move on to the next slide. All right.
yeah, so this is just a slide of all like the risks associated with the traditional finance system. You know, COVID-19, we started printing money. Like we went from what is this billion, 16 billion to almost 18 billion in money printing. With Bitcoin, that's not going to happen. You can't print more Bitcoin. You can't. You're not going to deval. The only way your Bitcoin gets devalued is if the price of Bitcoin gets devalued. So it kind of takes the supply and demand equation and locks it. In my view, you don't really have to worry about that supply and demand equation like you do with like traditional fiat currencies.
Well, right. The only supply and demand in Bitcoin is, I guess, the amount of people buying and selling Bitcoin. So I think we still have a supply and demand problem. It's just that, okay, once all the Bitcoin has been mined, then there is, a maximum of Bitcoin, so there's no inflation there. But I think that there's still supply and demand.
Yeah,
So there's no, yeah,
there's supply and demand in the sense that I have a Bitcoin, someone else would want that Bitcoin. So there's supply and demand between the individuals who want to buy or sell Bitcoin, but the
right.
underlying asset itself, the supply and demand has been locked to that 21 million. And because that 21 million can only go down through people losing it, sending it to like the wrong address or something like that, just forgetting that you have it in some way, only deflates the currency. There's no inflation. So I'd say with Bitcoin, it's more that um, there's really hmm, there's no expectation of inflation in Bitcoin. There's only an expectation of deflation. So when you're
Right.
for me when I'm doing that math, I'm like, okay, if the current Bitcoin can only deflate, but the US dollar can pretty much only inflate through money printing. Sure, there can be some deflation, but if you look at interest rates, I think, or where is it? Yeah, this chart doesn't show at the bottom where I labeled risky monetary policy. It's only that only goes back to 2004. But if you go back even farther, there's giant spikes on that sucker. you know,
Right,
so
on the dollar, right?
yeah, on the dollar. So um, that's why I'm just more interested in Bitcoin. And like this is just like a quick little slide. BTC only has 21 million. Every 4 years, the supply or the reward people get for mining Bitcoin gets cut in half. So right now, the the halving dates that I highlighted are just estimates, but we're going from
Mhm.
6.25 block reward, so 6.25 Bitcoin um, is being mined for the reward. That's getting cut to 3.125. So, and the way that I've kind of justified it is I asked myself, what would happen if all of the gold or half of the gold in the world disappeared? What would that do to the price of gold? It's probably, going to go up 50, 100%. So applying that
Mhm.
same logic to Bitcoin, I was like, if it gets halved, okay, supply just got halved again. I don't see a situation where, in the long term of it getting halved every 4 years, that Bitcoin won't go up compared to it going to zero. if that makes
Okay,
sense.
that's interesting. Yeah, I mean, I think there's an argument for that, but I can't form it, so I'm gonna let you win that.
It's okay. It's not about winning or losing. It's
Yeah,
just
yeah,
the,
yeah.
the Socratic method. Um, but
By the
yeah,
way, I like they use Canva, so I use this software for all my logos. Yeah,
oh yeah, Canva is great. Not sponsored, but go use
not
Canva
sponsored.
if you haven't.
No, nobody's actually watching us. Oh, ETF is watching. Okay. So ETF says I think Bitcoin is a store of value, us on unsustainable debt path, just a matter of time. Okay. Let's see here.
Yeah, definitely. I agree with that sentiment.
Yeah, store of value. Okay. So next up.
Yeah, so this is just a little snippet of the spreadsheet that I've been making for Bitcoin. The green that you see is the halving years, and so Bitcoin seems to follow this process of we have a positive return in the the year of the halving and the year after the halving, but direct after the 2 years after the halving, we've always been getting red. So I attribute that to the general market correction. Everything can't go up, infinitely. Otherwise, at some point, you you would just you would have too much. I forget. Elon Musk put it the perfect way. Is like if you had exponential growth, you would outweigh the total mass of the universe in like 10
Mhm.
years or something like that, right? So for me, when I see the red in Bitcoin, I just see it as the natural wave function of price go up, price go down. People have at some point people have to sell, otherwise it it's more. I don't know what I would exactly call it. If it never went down, that would mean everyone is constantly buying and no one's selling. So what, like, I don't even know if we have
Right.
a word or a term or a phrase for that. So I see the red happening, and I see it as just a healthy function of of a currency, of a store of value, of anything that us as investors were trying to look for. If I pulled this on up and it was all green, I would, or if anyone shows you anything that's all green, I would say go challenge them, go do your own research, call BS where BS is needs to be called. Um, but if you can see at the 2024 level, next year around April is supposed to be the next halving. So it not personalized financial advice, but for me, I look at this, I see the pattern, and I say, okay, as long as I sell my Bitcoin at the end of that second year before, or the second year after the halving, there's a higher chance of me making money on Bitcoin compared to if I um, sold early.
But
I should mention all of this was if you bought Janu- January 1st of the year and sold December 31st of that same year. When I was doing um, the calculations, and then I averaged um, the past 8 years of the halving and the pre-halving years. So in the this is under my assumption of putting $20,000 in January 1st and selling December 31st of the halving year and the post halving year, and about 1,200% return if you take all of those years together, which would turn that $20,000 into 277,000. But I also, I kind of did the
hang on.
yeah.
What year is that first column there? That was the year of halving and the year after. Yeah. What year is that? That is right.
Those are 2012, 2013, 2016,
Okay.
2017. So
Yeah, I get
before
it
the
because
halving and after the halving.
yeah, I was there. I bought Ethereum. Actually, I bought 250 in Ethereum, and then it went up to 18,000, and I did not sell. Then when it hit 2,000, my uncle convinced me that it's a useless asset, so I sold. Right now, I think that bit of Ethereum I had was probably worth at least 50,000 right now, and it was probably worth 100K in some point. So that was really bad. But yeah, so let's talk about.
Yeah. So I did, if we remove the top 2 years, which removes a where's the percent year returns? It removes a 208% return and a 304% return, and you average that, you get 174% return as like the bear case, removing that top percentage. And then for my bull case, I remove the bottom two, and it's close to a 2,000% return. And my whole thesis is like, okay, if during these 2 years it always produces a positive return, I could start DCAing during the Bitcoin halving year, and then keep going until you know this this second year after every of the halvings, sell before then I should be able to consistently, you know, have, I don't want to say cash flow because that's weird over like a 2 year time span, but have positive returns over that time frame. Um,
Well, I would say a lot of these well, I would say a lot of people in Bitcoin, I feel like they say stuff as a sure thing. I'm sure that's not what you're doing, but
no,
you know,
it's
I'll
a
just say,
general rule of thumb.
right. I think be a little bit careful of that, because the market is always going to sort of not go the way you think it's going to go. So I would say, this is not personal financial advice or anything, but if I was trying to get into Bitcoin, I would stay a little bit more diversified than most people. But it's definitely your choice, so I'm not going to say anything about that, right?
Yeah, definitely. And these were just like my rough averages because like Bitcoin swings, like it swung crazy in between
Yeah.
the pre-halving and the post-halving year, right? So that's why I was dollar cost averaging in during that time, because like you said, it's not a sure thing. I think anyone would be
Yeah.
crazy to, just throw all of their money in all at one time. Now, I plan to do that if Bitcoin ever gets back around 15,000. Um, but that
Even
that's
then,
just
I'll,
me.
right, right. Okay, cool. So let's move on to the next slide. So I think we got two more slides here.
Yeah, these were just like more uh, of the same thing, except for this one. So I took my bear case and my bull case, and uh, I averaged those, and it was still around 1,000% return. Um,
Mm.
and this
That is
is
an insane amount of returns.
a life changing amount of
Yeah. So
returns.
that's
But
in the next 2 years, right?
yeah.
Okay.
So next year, 2024. Let me come back up to here. 2024. Projected time of the halving is going to be April to May ish. So during this time, I'm dollar cost averaging, and during 2025, I'll be dollar cost averaging as well. But then before that 2026, where it's produced, a negative return 2 years after the halving, that's when I'm going to try to dump my position, but also keep, because I do believe Bitcoin is like that store of value. I'm not going to dump all of it. I'm going to put some of it on my hardware wallet, and keep that as the long-term play against the risky monetary policy of the U.S. and everyone else in the world. Because, like you said, everyone's pretty much getting inflated away, but the U.S. dollar is still a dominant player, even though it's also
Right.
getting inflated away. But that,
I was okay. So are we gonna move on from Bitcoin,
yeah,
or yeah? Okay. So I just want to say assets in general are a good hedge against inflation. So we have the obvious real estate. We also have stocks as well, and then we have what other assets are there? So
like
we got real estate, we got stocks.
gold, I would say is
Gold. No, I think gold is more of a stock. Yeah. So any asset in theory is going to be a hedge against inflation. Um, but I do understand the want and need for Bitcoin because it's uncontrolled and it's you can own your own assets. So yeah, I think Bitcoin is going to play a part in the future, because we are seeing those a lot of banks try to incorporate Bitcoin and then they are going to start Bitcoin futures. So I think that is actually going to bring a lot of volume into Bitcoin. And when that happens, as more Bitcoin exchanges hands, it's going to make it easier for Bitcoin to increase in price. So it's also going to make it easier to decrease, obviously. But yeah, I think Bitcoin is very, very early stage right now. The problem is that I don't have too much money because I only have like $70 because I would say it's actually pretty hard to buy Bitcoin for me right now. Uh,
Mm-hmm.
like just in general because the tax just not there. I still have on eToro, and then I have other sites as well. The problem is that I'm faced with like high commissions, and then a lot of other stuff as well. So I definitely messed up selling my Bitcoin and my Ethereum, but yeah,
Yeah, I mean,
yeah,
like in the short term, it's definitely, you can see it as a mess up, but I'd say it's more of just like a learning experience for the next time around that you can apply to, pretty much like, at least for me, like the life lessons that I've learned and everything that I've done. Like, it might seem like they only really affect that one instance that's happening, but I've come to find out that the peripherals around that failure or that gain like bleed into almost like everything that you do that you're gonna eventually learn from. So if anyone's out there like, oh man, I'm down so much money or whatever, just just know that in the future that bleeding is going to be an armor for you in the future
right.
from making those mistakes. And one thing that I want to say is I think the number one asset that we all have is ourselves and our mind. So
And time, and time.
in time, like
Yeah,
you might say like, oh, housing is an asset, right? But if you don't have the skills in yourself to keep that asset, you need to invest in yourself first before you go out trying to find an asset that you can attach yourself to that's going to take you into the future. Attach attach the value of an asset for yourself first before trying to attach it to any other, you know, means of value.
okay, so let's move on to our last topic here. Actually, let me see. Okay, how did I get into stuff? Okay, how about this? Do you want to talk about Tesla? Because I've actually been struggling to find anyone who's willing to talk about Tesla.
Yeah,
So
let's talk about it.
I
I love
I know
Tesla.
you're a huge Tesla investor. Let's actually bring up a chart here. I know you're not a technical analysis guy, right? On so eToro, and I'll just bring it up just to for people who are bored here. So Tesla right now they had a pretty bad earnings and they went down. It looks like about 17% over the last week here. So
Yeah.
once again, I have a regular savings plan with Tesla, which means I buy it every day. I only buy like $5 every day, and then I buy 15 on every Thursdays and Fridays because it just seems to drop every Thursday and Fridays. But that doesn't matter. So, what do you think about Tesla? Yeah, because you're a Tesla investor.
Yeah, well, I'd say my
Uh-oh.
Tesla exposure is like this was a mistake, and I'll admit it was a mistake. I wanted exposure to Tesla, but I did it through Kathy Wood's ARKK, which is
Mm.
down so much that I don't. It's sad days in for us ARK investors. Um,
Yeah,
but
sorry,
then
I was an ARK investor as well. I bought in at 120, and then I got out at $80, and that was pretty lucky of me. But yeah, that really pushed me out of ETFs. I just I don't really have trust on ETFs anymore. So yeah,
yeah,
continue.
yeah, definitely. Like my thought process at the time was I want exposure to Tesla. I think Tesla in 20, 30 years when I want to, hopefully retire is going to outweigh any sort of loss in the short term. Because I think, you know, I graduated high school in 2012, and I remember telling, because they were trying to push this whole like EV electric renewable energy, and Tesla at the time was like $12. I remember telling my grandpa, I was like, Grandpa, you got to get into Tesla. It's going to be the future. And now, you know, what, 12 years later, almost, he's like, I should have listened to you. I shouldn't have bought Disney. Because, like, I, my thesis around Tesla was like, who is going to get us to the renewable future that everyone seems to be pushing right now? And Tesla was honestly the only player at the time that I was aware of that I thought could get us to that. I didn't really know a lot about Elon Musk at the time. I knew he had a hand in PayPal, but I didn't know how like innovative PayPal was for the time. You know, I thought it was just, oh, it's like it's how I sell my Pokemon cards on eBay and I get paid through PayPal. You know, I didn't know all of the security stuff that they were doing in the background. But now knowing that and seeing how the leadership of Elon Musk is taking that same sort of thesis and putting it into everything that he touches, I don't see how Tesla fails. One, because even let's say their cars they go bankrupt, or they can't sell as many cars as they have been. Like you said, they missed earnings pretty hard, uh, and the bear thesis, everyone's coming out of the woodworks for it. um, but for Tesla, like, people see them as just a car company, but let's say even if the car aspect just disappears overnight, they still have all of this training data, all of this informational data that they could then turn around and either lease to other car companies, other industries. So people see, or the talking heads on MSNBC or whatever, they're like, oh, they're only a car company, so they have this multiple because people don't think they're a car company. And in that same token, they're like, data is really important. Data is going to drive the market, but they don't understand that Tesla has a boatload of training data already. They have the most amount of miles, and it's the training data in the future that's going to be the most valuable. Because let's say in the future, Tesla, like, let's say you want to start an AI company or something, you need training data. Tesla could rent you, lease you, or sell you access to the large data set that they have. And I just see that as more of a hedge against the whole, like, they're only a car company. No, they're a big data company because they have that machine learning aspect to
Right.
it.
I think the people who say that, which I think I do agree. Unfortunately, that they're still a company, but the reason people say that is because most of their revenues come from cars. But other than that, I do agree that Tesla is definitely working on other sources of possible income, which is going to, in the future, make them not a car company. But just right now, based on revenues, they are,
Yeah,
I
right.
think, a car company. But uh, let's see, what do I want to do? So, do you believe that in the next, let's say, 3 years, that Tesla is going to continue to go up? And do you think Rivian is going to survive? Because you guys are in America, so I think you guys know this a little bit more, a little bit better, just the car space. So yeah,
Yeah, we have a huge car culture here. Um, I would say on the let me know if I'm wrong, but Rivian's backed by the Saudis, right?
I don't
This,
know. I think
uh,
it's backed by Amazon. I,
oh, are they?
I'm not
Yeah,
sure. Yeah, I know Elon Musk definitely has a connection with the Saudis, so in some ways, both of them are backed in the Saudis. I mean, the Saudis have so much money right now that they're invested in practically everything. So I
yeah,
wouldn't be too out of the question for them to be, for both of them to be backed by Saudis. Because remember, when Elon Musk bought Twitter, I think some of the Saudis lent him like what $10 billion or something, or was it 1 billion? I can't remember. So they're both definitely backed by Saudis. But yeah,
yeah, yeah. So I think if the Saudis, if the EV play that the Saudis are trying to go for is Rivian, I don't see Rivian failing, just because they
okay.
have so much cash behind them. And Tesla in the next 3 years, um, I'll play out two scenarios for you. Tesla goes up in 3 years if interest rates start coming down at some point in those 3 years, and I would say Tesla either goes down or trades sideways if the interest rates for longer narrative comes to fruition. But like I see it like this: if when interest rates were low, right near zero, Tesla ballooned. So what's going to happen again when
Mm.
interest rates are near zero and money's easy? I don't
Right, that's
see
interesting.
I don't see a situation where interest rates and money is free, but stocks go down. Like it,
Yeah, no,
for me, it's just
no.
counterintuitive.
I've said this in multiple videos. The stock market has been going up while the interest rates are rising. So, at some point, what are the chances that the interest rate rising by 1% is going to destroy the stock market? I don't think so. I think the stock market is still going to go up as the interest rates go up because most of the companies in the S&P 500 are prepared for that. And even if they are not, even if they have a lot of debt, remember that the interest rates are not rising so fast that the companies cannot keep up. So I think just in general, the stock market is still going to go up as the interest rates rise. And I think they're going to actually start to cut in Q2 2024 or even sometime earlier from that. So do you think they are going to cut very soon or not?
Um, I think it's because I think core inflation was coming down slightly. Jobs market is going up, so I can see them starting to cut um, in the first 2 quarters of next year. But I don't think we have enough data. I don't think the Fed has enough data to
Right.
to make a hard decision. But if I would guess what I'm putting, where I'm putting my checkbook is Q2 is where the cuts are starting because that's when me and my family are planning on trying to buy a house. And it's going to, that decision is going to be affected by these interest rates. Like over
Okay.
here, it's like, before pandemic, before everything, we could pay, it was like 1,200 a month to own a house. Now it's 2,800. Not a lot of people have the cash flow for that here, especially in California.
That's interesting. So we both think they'll cut at Q2. So, let's see here. Well, oh yeah, wait, did we go through what war is going to do? Um, okay, no, we did.
Yeah, we did. We
So,
did a little bit. You guys got to go to the beginning of the video. Check that out.
okay, okay. So, apparently ETF says that Saudis are backing Lucid, and Rivian is backed by Amazon. So, yeah,
Oh, okay.
ETF
I got
Rivian,
those two confused. So I think
right?
Rivian
I
will do fine. Amazon's growing. They're going to continue to grow. Not to mention, like with all of these companies, we also have to take a global perspective look at them, right? Do we really think Amazon isn't going to like get their hands in some way into the third world market when their infrastructure gets up to that point? Or do
okay,
we
that's
or,
interesting.
or do we think they're just going to stay in the U.S., the U.K., or wherever they're operating now? So for if you're investing for like retirement or for like trying to put something away for your kids fund where they're going to need it in 30 to 40 years, you know, 30 to 40 years, where do you see Amazon? Where do you see all these, quote unquote monopolies going? Do you think that monopoly power is just going to go away, or do you see that monopoly power reaching into other countries' markets and taking, gaining a majority market share? We can already see that with Tesla in China. I think, forgive me, I think it was about a year ago when I saw this, but the Tesla EV market in China was, I think it was like 10-15%, something around there. Um, and I'm sure that's only grown from there, given that in that time frame they've opened up another factory in China. I just see all of these, quote, tech companies, Amazon, Tesla. I only see them growing even more into, the third world countries that aren't, like the major countries that we're all a part of, you know.
Okay, so one last thing. The reason I only got into Tesla is because I started seeing Teslas on my own country's roads, which is it used to be a very very rare sight. But now that I know that Tesla is able to expand all the way here, then I know that they don't have any trouble producing cars anymore. And you know, once all the infrastructure is in place, I think Tesla is going to take over. But we'll see whether that's correct or not. So last question is by you actually. How do you or we prepare our portfolios for these next new wars? In what is our plan if these wars continue for the next 10 years? So I have a very quick and simple answer for that. And the answer is just don't care about the wars. Just invest like you would normally because it doesn't really matter. I mean, just looking back, the amount of wars that the stock market has been in, it never really caused a huge rift. I mean, we saw a slowdown for the first, you know, few years after the wars, but since this war doesn't involve the U.S. directly, it's just not gonna affect the U.S. I mean, we're just fighting wars based on proxy right now, and it's unfortunate for those countries that are at war. But eventually, all the money that we print, or all the money that the U.S. prints, is gonna flow back into the stock market at some point. So yeah.
Yeah, definitely. I pretty much agree. You know, I think these wars, if nothing else, are more of a buying opportunity. Instability, like the big funds do not like instability. You know, they have a certain percentage that they have to return to their investors, and if they see that there's a possibility, like even a 20% possibility that they're not going to get that return, um, then they're going to sell, and that's a buying opportunity for the average Joe, like you and me, or like someone just running a small fund. Um, like you said, they're wars by proxy right now. In the future, if it becomes not a proxy war anymore, and it becomes like a technological space race, something like that, where there might be some direct impact onto a particular segment, then I would say worry about it. But if you're diversifying enough, like I have a lot of money in Palantir, but if you know wars end up happening and Palantir gets hit or something, I have enough diversification to where I'm not crying at night because my portfolio because Palantir dropped 10% or something like that. So I think just diversifying is just
Right. So I
generally
I,
good.
I currently have like 16 positions, which sounds like a lot, but actually, if you look at a chart, I will just show a chart in my school. Let's see if I can find it. It's about diversification, and the minimum amount you should have in your portfolio is um about 15 to minimize your risk. Right, diversification portfolio. Let's see if I can find it here. Okay, found it. So I'm gonna share it, and I think I'm gonna end this off right after this. Then I think next week, if we still do this podcast next week, we can go through Palantir.
Yeah, definitely. Dude, I love Palantir. That's one of the ones
Yeah.
that got me. So next time for sure.
So over here it says 20, but some charts show 15. So to minimize your risk, you can use about 20 stocks in your diversification. But obviously, if you use that, your returns are definitely going to go down because less risk, less return. It's just the way how it works. But this is
Yeah.
modern portfolio theory. Yeah. So I'm going to end it off with that. Thank you, John Such, for joining me. I think it has been a very interesting conversation, which is not something I have every day because I don't, uh, you know, I just don't have people to talk about this stuff with. So thank you for your time. It was a really good meeting, and I hope this podcast does well. So yeah,
Yeah, definitely. It was great talking with you. Like we said, I don't have anyone in my life to
right.
really talk about this stuff with. So if we could get this going for an hour each week, I think it would be great. I think both of our audiences would appreciate the perspectives.
Mhm. Okay, thank you.
Awesome.
See
Thank
ya.
you. You have a good one.